All right. So can you guys see my screen?
Yeah.
All right. So I'm gonna say something about the market before I start with this. So the market is being governed by demand and supply, right? If anybody tells you something else, it's a lie. The market is being governed by demand and supply. Basically, demand means buyers, right? And then supply means sellers. So if you see the market going up, meaning buyers are buying, right? Are buying things. So if I had a buyer buying USD, then meaning the USD is going to do what? It's going to go up. So if institution or the banks, wants to buy something. All right, so let's do this. If I had a bank in what is it called? In let's say I had all right. So I had a bank in US, right? JP Morgan or Bank of America. And then they wanted to buy, they wanted to purchase something in Europe, right? They need to convert that currency to what? To the pound or the euro before you can buy something over there, right? So basically you need to convert the USD to what? The pound. So if they buy the pound, that is when you see price moving up, right? That is where you see price moving up. So I want to buy something in what is it? In euro, but I need to convert that currency to what? The euro currency. So basically I have my money is bigger than your money, right? So if I'm buying something, then obviously it's gonna push price up for that currency. If banks are buying the euro is gonna go up. If banks are buying the pound is gonna go up. If they are selling, right? So basically, so let me show you guys something. So JP Morgan wants to buy something from a bank in Europe. JP Morgan has USD, right? That's the USD currency. I want to buy something in euro. So I need to convert that currency to what? To euro. So basically, I'm selling my what? My USD. And I'm buying what? My euro. So basically, what you guys see is you see the euro USD doing what? Going up. Because I'm buying this, right? I'm buying the base currency and I'm selling the code currency. So if I'm selling something, then I'm expecting that thing to do what? To drop. Right? If you buy something, then you expect that thing to go up. So the market is being governed by demand and supply. Demand, buy, supply, sell. And then if I don't know if you guys say economics or anything, but like in those type of topics, right? It says if demand is more than supply, then I expect price to do what? To go up. This is what it means. So if I'm buying something, right there, I have more buys in the market. I have more buys in the market, and then I have few sellers, right? I have few sellers. Let's say I had why is this not showing up? All right, so let's say I had 100 buys, right? And then I had let's say 20 sellers. So basically, after I make this transaction, right? So this transaction that you guys see, this transaction is gonna happen when you guys see a consolidation, right? This consolidation means transaction is being happening. So if you see price going up and all of a sudden price is what is consolidating, is going up, meaning there is a transaction that is being made. So basically what you see is one buy order to what? One buy product to one seller, right? So someone is buying something, I'm selling it to that person. So basically what you guys see is you see the matching orders, right? Buy to sell, buy to sell, buy to sell, buy to sell. Now I have what? 20 sellers. I have 100 buyers. Demand exceed what? Supply. So the law of demand means that says that if demand is more than supply, then obviously price is going to do what? It's going to go up. I have more buys. I still have more buys in the market. So after this transaction is being made, I still have what? I have 80 unfilled buy orders. I still have 20 products to sell to sellers, but I don't have any sellers. So the market is going to what? Shoot up to get sellers. Do you guys understand what I'm saying? Right? So this is basically how the market moves. Same thing with supply. If I have 100 items and I want to sell them, right? And I have few people buying them, then the price is going to shoot down. If I get buyers to buy them, you're going to see the market going up, which shows you what? transactions, indication of what transaction. After I sell those 20 things to the sellers or 20 things to the buyers, then I have what 80 things to sell. I don't have anyone to what to do them. I mean, I don't have anyone to buy them. So basically what the market is going to do is drop. The market is going to look for buyers, and then the market is going to shoot back to the same place, right? Because I have what 80 unfilled orders. I still have 80 things to do what to sell. So since I have 80 things to sell, then the market is gonna, so this place is kind of like a magnet, right? It's gonna attract buyers to get back into the zone. So basically this is what retail does, retail sellers, retail traders. Retail traders are gonna buy to this region. And then when they buy to this region, what you see price doing is you see price dropping. And I can show you an indication of, these type of transactions. So this is called order flow. This has nothing to do with price action, but I'm just explaining this for the next thing that I'm about to do. So hold on, let me show you guys something real quick. So if you guys can clearly see this, right? This was indication of banks selling. Banks were selling, and then we had buyers in the market, and basically this was where transactions were being made. So we were expecting what buyers to buy price to this region, and then if buyers should buy price into this region, then I'm expecting what a drop of this price. And let's see what happened. So this was the region, right? This was the region. Basically, market closed, so we weren't able to take this. We weren't able to trade this. But this was the region, right? And then we're expecting price to drop at this point. Price came right into this point, and price was dropping. Let me show you a good example. It's going to be the pound USD right here. All right, so this. So for some reason, right? Let me just erase this. Oh, sorry. All right. So this shows an indication of banks what? This shows an indication of banks selling. And then what happened was that banks sold price way down to this place, right? And then since banks are selling, meaning this tells you that sellers are still in control of the market, right? So if sellers are selling and then you still have market, going up, the market will still what sell, because I have what more sellers than buyers. So even if you have this is going to be just a brief consolidation, a brief correction. Remember what I told you guys, impulse, correction, and then what? Impulse. So this is the impulse. I have this correction, right? I have this unfilled orders. So I'm expecting price to drop off this. Let's see exactly what price did. Price went up, went up, went up, went up, went up. All right, so this is my level. See, price hit this level. See what price did? Price went down off this level. So basically what I'm saying is that the market is being governed by, demand and supply, buyers and sellers. If buyers are more than sellers, then obviously price is going to do what? It's going to keep going up. If sellers are more than buyers, then price is going to keep going down. That's what I'm trying to tell you guys. So let's talk about this, right? These structures, where is it? These structures, right? Wedge, flags, triangles. All right. So what I'm going to be doing first is I'm going to be doing flags, right? So what is a flag? A flag is basically a continuation pattern. If market is going up, market is going to keep going up. If market is going up, right? You're going to still have market going up. But how do you trade this? How do you know if market is going to break out from this structure, right? The first thing we're going to be talking about is a flag. A flag looks like this. All right, let me do this clearly. So I have market going up, right? And for some reason, I had sellers in the market, and then market was, going sideways just like this. Going sideways just like this. I told you guys that anytime you see a consolidation, what do? You take your trend line, you draw a straight line, and then you wait for market to do what? To break. If market should break off this, then I'm waiting for what? A retest back to this level. And then since I still have, buyers buying, this is just a correction. So I'm expecting price to do what? To go up, basically. Right? This is how it looks like, right? Price is going up. You see this brief consolidation and price breaks and it goes back up. I'm going to show you an example of this flag. So I'm going to be using the the Euro NZD. All right, I'm going to take this off. I'm going to take this to a 15-minute time frame. So I had sellers so I talked about key level resistance and support. So you guys should know why price dropped, right? Because this was a key level. So price was dropping, right? Price dropped like this. So sellers got into the market. And then what I'm seeing here is a consolidation. Market is going up, doing this, does this, does this, does this. And then finally market broke this level. If I should take this off, what do I see? I'm seeing a flag, right? A flag. And this was the breakout. Market dropped, right? So this is called a continuation pattern. Basically, market is going up. You see that brief consolidation. All you have to do is draw a line, right? A line, and then you wait for that breakout. If market breaks, then you take your entry. All right, the second one is going to be if market is going up like this, right? And then market is so it's the same thing, but we have different, different structures. It has different structures. It's the same thing. So market goes down like this. It goes up, goes down, goes up,
Do you know what you're doing?
goes up like this, and then
Hey,
finally
why don't you let me do it? You finna leave, right?
breaks up like this. Right? And what I'm expecting price to do is I'm expecting I'm expecting a retest. And clearly, if I take my trend line, right? I take my trend line, I do this. What am I seeing? A breakout of structure, right? So this is a breakout. I'm expecting a retest, and I'm expecting price to do what? To go back up. This is a second structure, right? And then the next one is gonna be like this, right? You have price going up, price is doing this, price is doing this. Right? Price is just ranging, and price broke retest. It went back up, right? I'm gonna show you these things in real graph and how it looks like. All right, let's see. Price is going up, right? Price is going up. If I should take this to a 5-minute time frame, price is going up. I'm seeing this brief consolidation. I take my line, right? Draw a line. What am I seeing? Break of structure, and then price went up, right? Same thing. Price is going up. I take this break of structure, right? Price went up. Like it's basically everywhere. It's basically like everywhere. This, right? I take my line. You could even do something like this, right? But like you could have it like this, so that's fine. This is a break of structure, right? Price is coming down. I'm seeing this brief consolidation. So basically, what if you want to be trading with this type of strategy, right? What you have to do is anytime you see that consolidation zone, right? You just draw your lines and then you wait for that break retest, right? This is going to be a retest right here. Boom. And it goes down. Right? Same thing with this. It goes down. I'm seeing this brief consolidation and it went down. All right. Goes down, brief consolidation, and it did what? It went down. Let me use a high time frame and see if I can find using a high time. Yeah. So price went down, right? I'm seeing this brief consolidation. So basically, if price should break up, then I'm taking what? A buy trade. But since price broke down, then I'm taking my what? My sell. Same with this. Let me see. This is a nice one. If I should take this to a lower time frame, you guys will see what I'm talking about. Right? I have price going up. I have a brief consolidation. I have a breakout. Remember what I told you guys, right? If price should break with a full candlestick on the line, then price is gonna still go up. So this is gonna be my indication of this buy. So I'm gonna take my entry right after this, right? Boom, to the upside. Same thing. Price is coming down. I'm seeing this brief consolidation, right? Price broke. I take my trade. I'm seeing the next consolidation. I draw a line, price break, I take my trade, right? This consolidation, price breaks, you take your trade. Same thing with this one. Right, price is coming down, price is coming down. I'm seeing this brief consolidation. Price break, I take my trade, right? You have a different one here. So this is basically like, a scalping strategy. If you want to scalp gold, you could use this type of strategy to scalp gold, but I don't trade gold. So let me switch to gold and show you guys. Right, brief consolidation right here. Boom, boom, boom. Break, take your trade. This, right? Break of structure, retest. So the reason why I don't trade gold is, look, what if I took my trade here, right? And this is not going to take you out, because if you trade with breakout strategy, right, this is not going to take you up. You wait for price to break, retest, and then you take your trade, right? Same thing with this one. I have a consolidation zone, right? I already have price coming up. So first of all, what you need to know is price coming up or down, right? That's what you need to know. Price is coming down, consolidation down. Price is going up, consolidation up. Price is coming up, consolidation up, right? If price is going up, don't be taking sell trades with that consolidation. You should be taking trades up since price is going up, right? Same thing with this. Right, price is ranging. Price broke all the way up, right? Same thing with this. You just need to know how to draw your zones, right? Broke, price went up. Same thing, price. You could extend this, take this to a lower time frame, find your entries, right? Price was coming down, saw this brief consolidation, price went down, right? All right, so price was going up, saw this brief consolidation. Or basically with this, right, you could have two structures with this one. Let me take this up. All right, so I can basically have two structures with this. I'm gonna open this up, right? Draw this. This is a breakout of structure, right? Market broke with a full candlestick open and close on this line, right? So I'm expecting price to go up. Same with this, right? See, broke, full candlestick right here. Price went up. Engulfing candlestick, fully closed on this line. Price went up. So basically, if you want to be trading with these type of setups, right? This one, you just draw your line, wait for that confirmation, breakout, and then you take your entry. That's all you need to do. I think that is going to be it for today. If you have any questions, just let me know. And if I find something else too, I'm going to have a Zoom call with you guys in my mentorship group, and I'm going to explain to you guys. All right. But today, that's going to be it. So if you have any questions, you could type it. You could ask me. All right, I'm going to stay for like 10 minutes. If you guys have any questions, you can ask.
So if you're in like a consolidation and it's like climbing upwards, you would want to go in for the buy, or it doesn't matter?
So basically, if price is climbing up, right, meaning we have buyers in the market, buyers exceed sellers. The law of demand says if buyers exceed sellers, then price is going to keep going up. So if you have price going up, that brief consolidation, right, that consolidation, that up ranging market is, it shows you indication of a transaction. So if that after that transaction, since I have more, it's like I'm selling, I have 100 iPhones, and then people that want to buy that iPhones is only, I have 100, right? People that want to buy is only 20. And buy means it's going up. So after I have that sell, which is that consolidation, right? I still have 20 iPhones that hasn't been sold. I need people to buy them. So price is gonna keep going up to look for people to sell them. Do you get it? So if price is going up, then it shows you that price is gonna keep going up. So that consolidation zone, right after that consolidation zone, right, price is gonna keep going up. But what you have to do is you have to know how to use these trend lines to draw a line around that consolidation zone, just like this, right? I have a huge, strong candlestick, right, going up, and then I have a consolidation. So all I have to do is just draw my lines, wait for that breakout, and then I take my trade to the upside.
Okay, yeah, that example made it make a lot more sense.
So yeah, you can see right here, look, it went up, brief consolidation. I have bias, it went up, and then this was a brief consolidation, price kept going up. Look, so basically with this strategy, right, all you have to do is just find a trend. Let me see. So last week, right, this kept selling. So if I wanted to trade something like this, right, I could take a trade here. All right, this side I could take a trade here, a trade here. I'm not gonna take a trade here because I don't see anything. So basically, where you think you can, draw a line, and then if it breaks, you take a trade. At this side, I could probably take a trade. Yeah, I could take a trade here. So basically, market broke, right? This is a trend. Market broke, retest on this line, right? This was the retest. If I take this to a lower time frame, you will see the retest. This rejection on a lower time frame, you're gonna see a candlestick retesting this level. So I can take a trade here. Let me see. All right. So this is a very good example. Market is going up, right? I'm seeing this brief consolidation. Right? So basically, your trend line, your line, you don't always have to have a line like this, right? Your line is not always going to be like this. You could have a line like this, and then you can have a line like this, right? I'm going to show you an example. Look at what I have, right? I have a line here, and I also have a line. So if this breaks down, then obviously I'm taking a sell trade. But it broke up. Look, it broke, came back to my region, retested, right? This is a retesting, and went up. Now I have my key level being retested, right? So I'm expecting price to go up, but I'm not going to take my entry. Basically, I could take this to a lower time frame. Draw lines from this to this, like this. Do something like this. Find a breakout and take that trade, right? So with breakout strategy, you don't really need to be drawing wicks to wicks. If you want to be trading like, with a high time frame, that is where you need this wick, right? With that breakout, it's basically, trading. It's basically scalping. You scalp. It's basically scalping. All right, so this is also going to be a good example. So basically, market is just ranging, right? You draw a zone. You draw a zone like this, right? And then you wait for market to break out. If market breaks to the upside, if you want to trade in between the zone, you could keep trading in between the zone. But one thing is you don't know exactly when market is going to break out, right? That is why the breakout strategy is the best. If, let's say, market hit this level, and as I know, based on what I told you guys the last time, right? If market hit your support level, you buy, hit your resistance, you sell. So what if you take your trade and, sellers were still in control of the market, and then it goes down, you lose your trade. But if you wait for market break up, retest, you take your buy trade. Market breaks down, retest, you take your sell trade. All right.
Okay, yes, that made a lot more sense. Thank you.
Any more questions? And also, this is a very good example. The Euro NCD. As you guys can see, market was coming down, right? Brief consolidation. Breaks. Look at this retest, multiple candlestick. This was a huge candlestick that closed on this line, right? And I kept seeing multiple retests, so you could take your entry. And then market was, basically, if I had a line like this, right? So you don't always have to draw a line on top. Since market is going down, then you just wait for that retest. So I know market is going down, so all I need is this line, and I need that break. So you don't always have to be drawing lines on top, unless you think market is going to break to the upside. If you think market is still going to go down, then I'm just looking to sell. So I need this breakout. I don't need this breakout. So you could choose not to draw anything. You could just draw this line. And over here, as you guys can see, very nice breakout, 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 right? Keep trading this break, you trade, retest, right? You trade, break, you trade, just like that. If you guys don't have any questions, then I think that is going to be it for today. I hope you guys have a wonderful day. Bye.